Good afternoon. I'm Doc from OnTheMoneyOptions.com. Today I'm going to show you how we protect our positions in the Safe Harbor Income Protection Portfolio. Now, when one of these big storms knocks on your door, it's too late to start looking for a place to hide. Here on the coast of North Carolina, we get some notice when a hurricane is approaching, but in the stock market, these can show up without notice. You never know what's going to get hit or when. And most likely they come in the dead of night when the markets are closed. As a result, investors constantly worry about a market tumble. Right now, with indexes at all-time highs, I hear a lot of talking heads saying it's only a matter of time. So today I'm going to show you how to put a collar on that fear. This is a chart of a utility stock, symbol NRG. The white shaded line shows our entry at the $18.57 level, and the stock is now trading at $34.31. We want to protect this profit and do so without cost to the client. As part of our early warning system, we constantly watch how money is flowing from sector to sector. Recently, the utility sector has come under some pressure as money flows away from it. It doesn't really matter why money is moving away from the sector. It matters that it is moving away. NRG pays a dividend, but we're not going to risk 100% profit to collect the dividend. To protect this position, we have purchased what is called a protective put. The strike price of the put is $31. So with this put, we have protected our profit below $31 per share. This put will remain in place until the expiration on September 21st. At that time, we'll buy a protective put that expires in October. Better yet, we've purchased this protection with funds received from selling a covered call. This means the protection has been applied without out-of-pocket cost to the client. I call this the SWAN principle. We can stop worrying about losing our profit in NRG if the stock suddenly dropped. In fact, our whole Safe Harbor income portfolio is constructed this way. Here's a spreadsheet of all the current stock positions in the portfolio. Of the 35 stocks in the portfolio, 21 positions have protective puts greater than the entry price of the stock. The very last column shows you the percentage amount of profit protected for that position. 14 of the positions have protected puts below the entry price, but no one position has more than 10% of its purchase price at risk. My clients can sleep well at night, and so can I. So until next time, this is Doc saying so long and stay hedged.